So today in this video, we're actually going to go over some of David's trades, which is my client, and he's just going to break down a little bit of what he specifically seen per trade and why he specifically got in. And then I'm also going to reveal to him something that even if we don't necessarily change the win rate itself, what we're going to do is actually do something that is going to allow him to still actually make more profit per trade over time, even if we don't change the win rate. And so what we're going to do is just go line by line what he specifically trades that he took from last week, right? And we're going to be going over gold. And so, yeah, without further ado, David, just walk us through specifically what what your strategy is and kind of what you were looking for.
So, as we see, this is a win trade.
Mm-hmm.
So if we go to the time frame of day, which is a day.
Okay.
So the win trade is right here. And so as I see that on the daily time frame, we have it started to create from down here a bullish structure.
Okay.
And then from Tuesday, from 2 weeks ago,
Mm-hmm.
and then till Friday, it broke structure as it was creating a little bearish. Otherwise, it was still a bullish trend.
Absolutely. So you like to walk the chart down from a higher time frame all the way down to a lower time frame?
Yes.
So you normally start with the daily.
And then I see it did like a pullback and then sort of broke this low, but was still continuing to go to an uptrend. So since on Monday, I saw it was starting to fill that gap. And then on Tuesday, which the trade I took, was that it was finishing to fill up that gap. But I saw more possibility of it breaking, taking a turn to a bearish. And so I went to a 4-hour time frame. Since the daily time frame could give us some clue of what direction we can go to, but the smaller the time frame, the more prediction we can have. And then as we see here, we see it was a bearish down here, and then it broke its last high on Sunday in the afternoon, since market closed on Friday around 5 in the afternoon. And so, but as time went by, I saw a gap appear in the 4-hour time frame, which already filled up this one down here. And then it filled that one down here too.
Okay. And so were you anticipating waiting for it to break this structure here? Let's see if we can draw a line. So were you?
Oh wow!
So the only way that you were looking for buys if it broke above that zone specifically, or what was your thought process that way looking?
Well, since on that day I was already on the chart, right, and was getting to my time of trading. In the past, I saw that it already had broken through here, right?
Nice.
And it was starting to create higher highs and high lows. And then if we move to a 1 hour, as we can see to the left side, it was already filling that. And then we had this one awaiting, which it did fill, but it credit went and filled more. Since it's all bullish, right? And as soon as I saw that, I was waiting for a order block up here.
Okay.
I secured two, because in case it breaks this one and I don't see it come, and if I take a loss, I could re-enter here, or if it break here, I could enter one here.
Got you. Excellent. So you already had an idea that before price actually got to that point, you were already looking for areas of interest.
Yes.
Okay. Excellent. Okay, and walk us through specifically what allowed you to enter into that particular trade specifically.
And since I was waiting for it to get up here into these areas, first, which I like to use the order, and when it creates a huge move towards the upside, it comes back into the order block and refill that balance between sells and buys. So we had sells here, and then it did a strong push at the upside, right? And then it comes right back to fill up that order block.
Right.
To be able to have a balance for it to have an even higher push towards the So soon as it starts to consolidate, and then we have that spike up which broke out of that zone right there.
Perfect.
And so it came back to pull back and equal those sales and buys. And then I moved down to a 15-minute time frame. And so same thing. I even mark a 15-minute order block.
Mhm.
Since I know that price ain't gonna come fully all the way down here. And then we even have a seller. And then it creates a big bullish up to the upside. Right. And as we see here, it comes back in here and touches it. And then it had a reaction. So it was firstly starting to go down, right? And then we got a reaction from bulls, ready to start its trend to stop.
Got you. So you were looking for the order block. You was waiting for that particular area. So are you waiting for it to build up that support first before initially trying to take the trade, or what were you thinking for this particular area, for that area of interest?
Okay, since we see on the left side, it had came several times, right? Which filled this gap right here, and then we have this consolidation, and then another gap here, and so it even touched the order block, which gave the opportunity for the price to start going up, right? And then from there, I was waiting for a reaction, right? So if price was starting to come into this order block more, it would be even a higher percent than it is towards that area. So it could have been even higher.
All right.
And so as I waited, soon as it starts to come in, I just wait for a green candle to show up, right? To know that price most probability is to go to up instead of coming in right past it.
Right. So you wanted to wait to see if it had that support, make sure that the green candle specifically for buyer is actually one off of that push.
Yes.
Okay. Excellent. Sure.
And so as time went past, which I like to use engulfing candle. Right? So I waited for that confirmation for me to enter that buy, which I didn't, as we see a bullish, then a bearish candle right here. Soon as the next candle opened and created a bullish candle, I enter into that trade right here.
Nice.
And so as I entered the trade, I saw a gap here too for sellers to come in and could have turned the price down, right? Which I didn't wanted to risk more towards the upside, which could have a possibility to turn to the downside. I ended up a 2-to-1 ratio.
Nice.
So twice the amount I'm willing to lose instead of going for a 2-to-1.
Nice. So let's break that down. That is absolutely incredible trading, right? So you go from the daily time frame, understand what the overall momentum currently right now is sending into the market. So you're seeing it was overall bullish on the daily. Then you're walking your way down to seeing on the 4-hour, seeing if it's bearish or bullish. So you're seeing it was also bullish. So now you kind of like are getting majority of your structure base coming from those higher time frames. And then, okay, so cool. So that is, for a lot of you new traders, that is pretty powerful when you can stack all of these different time frames together to give you a little bit more indication of the overall, structure. So that's what he was doing. He was just walking himself, line by line, getting more data, right? Not just trying to jump into the markets. He specifically wanted to, find something of key levels of interest first in order to take those trades. So now when he's getting down to, so your 15-minute is majority of the time you're looking at confirmations to specifically take those entries, by looking at the 15-minute time frame?
Yes.
Perfect. And so now you're able to even see a little bit more of the market structure within each of those massive candles of that 4-hour or that 1 hour, specifically what's happening, within those hours. And now what I find very fascinating is you went based off of, the order block itself, understanding that the buyers from the left-hand side showed us in the past that they were already dominant in that area. And as a result, that's all you were waiting for. You understood that price is going to eventually come to you. You stayed patient, waited for this order block to get filled. And then now you're waiting for a final confirmation to remember that the buyers can always give you that, confirmation themselves. And so you've seen that this is also known as a Raleigh-based rally, right? So the rally is pushing the price up. And then there was a stall, which is called the base. Sellers want to push the price down. And then, so now this is the baseline. But the next candle, if the next candle is a bullish candle, then now that is what you call your Raleigh-based rally, because now it's showing that, the sellers are basically want to push the price down. They couldn't because the buyers are in domination in that particular area. And that's excellent because now you took a trade from the equilibrium zone and then now you was able to catch this beautiful move up to the upside. But the other thing that I heard you mention, which is beautiful, that I think a lot of people, when it comes down to this trading space, when you're in that trade, all you can focus on is like, man, I'm constantly seeing the market just going in more in my favor, and you just stay into the trades and you forget you're playing altogether. And what I find fascinating is specifically you understood what the markets was already, showing you. From, if you look left, you notice that there was also the vice versa of that, which is also called a drop-based drop. So this is showing us in this particular area, sellers were more dominant. And so you mentioned that you wanted a 3-to-1 ratio, but based off what the markets was specifically telling you, right? It was saying that I'll rather just go ahead and give me the profits of what the market has already given me here versus taking a risk and then, getting stopped out. So I found that very important and key, is that even if you had your entry right, but you decided to, go past the levels of where price is already telling you that you could get some kind of resistance in this area, then that same trade that just gave you a massive amount of pips, you're still into that trade and then could eventually just hit back to your stop loss. So, I mean, this trade right here is definitely a 10 out of 10 on this execution wise. All of it was just incredible all the way around. The way you were thinking about this particular trade is absolutely incredible. So yeah, good stuff on that. So let's move on to the next one. What we got?
And so, right, since we see price that came down right, on the same day from yesterday's, which was on Tuesday, and then on the next day, which is Wednesday, it came here and filled this gap that created as well. And then by Thursday, it came even farther down to fill even that gap even more, right? And if we go to 4 hours time frame, from the daily time frame, there was no gap ratio where it came to. There was one down here, but I saw that price was not going to be able to reach down here.
Mm-hmm.
And so it didn't even broke the lowest part right here after the change of character from this side.
Right.
And so it was creating a little bearish
momentum.
Yep. And then we go down to 1 hour time frame. As we see here, we was able to break lower lows and then we had a consolidation up here too. And so as the way down it went, we didn't see I didn't see no. And so I was able to mark this red candle right here as an order block. And then from there, I just saw price came down.
Yep.
You already gave me some point where to enter before the channel actually enter.
So did you specifically draw this triangle from the 1 hour time frame, or you were still walking it down from here?
I was still walking like this.
Okay.
And then we go back to 15 minutes. And so I draw another 15 minutes. And so I saw price. And so I got my confirmation over here, right? Price already came up to here, filled that up, but couldn't have enough momentum to push it. And so I already gave me my confirmation 15 minutes before I even got into the trade, or was already at my desk ready to enter the charts. And so as the time went by, I wasn't in a rush. It didn't matter if I missed opportunity or not, because I'm gonna have more opportunities later on.
There you go. Absolutely. Nice. So yeah, I mean, great strategy all the way around, right? You understood that overall walking the time frames down there was an opportunity for there to still be sales, even though the overall was still bullish momentum, which was pretty incredible because even if we're looking at it from a higher time frame, we notice that most traders, when they are now starting to see a massive sale happen, they feel like it's going to be almost a thing of it will continue, right? Or they don't even know why certain things are happening. But realistically speaking, this is nothing more than a pullback, right? Because one of the things I like to do, once I have identified the trend, I'll walk it down with the fib from the low to the high. This is the impulse of this move. So, of course, we know what goes up eventually must come down, right? So here was the initial breakout. Price breaks out. It stalls in this area. Why? Because in the past, it shows us this was a heavy resistance in this level. So there was a lot of resistance still in this level. So once when it was able to create us that opportunity for it to break above, right? Now there's nothing stopping it on this left-hand side, right? There's nothing stopping it. So now when we look to the left, look where it came into. This was an area where buyers pushed the price back up after the sellers wanted to continue to push it up. Now we got that engulfing set up here. So if we look to the left, it shows us this is why it stalled in this particular area. And now it's using that same zone that it used to have so much struggle to break above. Now that it is above, it's using it as the floor, creating that support for it to continue up. So this is the overall impulse of that particular move. But now when it comes down to your opportunity specifically, you notice that even though we were overall bullish, you still seen opportunities for us to take the sales based off of the new trend that it was still currently making on a lower time frame, right? And so that's very significant because, here it is. Some people think that just because they see on the daily, it says bullish. On the 4 hour, it says bullish. 1 hour, even maybe say bullish. But then when you get on the 15-minute, it says bearish. And now you're like, wait, am I still supposed to be taking buys? It just depends. It depends on what you trained your eyes to being able to see. And so again, going back into that time frame that you had there, it was like I said, it's just well spot on, excellent, excellent trading on that. Because again, you're trading based off of what you're actually seeing. What is the market revealing to you specifically in that moment for you to capitalize on that moment? So just well done on that. Well done on that. So again, just another 10 out of 10, scenario, you sticking to your strategy, specifically knowing what you're looking for and then just executing on it once when you see it. Other thing that I heard you mention that was extremely powerful is even though you've seen that it was about to stop you out, right? You held on to your entry. Most people would just cut their losses, right away once when they started going to drawdown. You specifically wanted to understand that if this was the original plan of what I specifically wanted to see, I want to come back with all the data. Excellent, 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 excellent. And so you're coming back with all the data. And imagine if you would have taken that trade out any earlier, right? And you would have cut your losses early, what would have now happened mentally when now you look back at the charts and then you still had this on your trading view, and then now you see that now you would have actually won that trade altogether. And so I think this is a prime example too as well, is some of us as traders, we think that when we look at the chart that we're only just somehow looking at these candlesticks, how they move, how they operate. But in reality, I like to say that really when it comes down to us trading is like us looking ourselves in the mirror. Because at the end of the day, the market is not forcing him to get out of his trade, right? The only person that can actually get him out of his trade is him. So if he put parameters in place that say, okay, I'm putting in my stop loss. Cool. Okay. I'm putting in my take profit. Those are automatic settings that he has control of to specifically protect his account if he does, lose. But simultaneously, if he does win, it also protects him from making sure that he's securing his profit. And so this is a very clear distinction between some of us may not be where we want to, be in our trading results now is simply because we don't really trust ourselves. We're creating a plan, or we might not even have a plan, but let's just say that you're creating a plan. You're creating a plan, but you're not actually sticking to it. You're not trying to actually see what your data from what you specifically seen in the market the first time. You're not letting it play all the way through for an opportunity for you just to see what are you actually seeing and what can you adjust later on, right? So this is what we're doing now. We're going back and seeing what specifically works and what can we do to continue to keep improving it, right? And so again, he's just sticking to a strategy. It's working out, and this is just a clear example again that the opportunities that you see, even though that the market is telling us overall bullish, there are opportunities for you to still be able to take sales too as well, given the circumstances. So again, another 10 out of 10 situation. You stuck to the plan, you executed efficiently, and you have multiple confirmations to let you know that sales are still valid. So yeah, well done. All right. So what's the next one we got?
Oh, and another thing I didn't mention was that we do see in 1 hour head to short, right?
You covered.
Which I still stick with the plan or my own plan, right?
Yeah.
And even a better confirmation to take sales, right?
Absolutely.
So since all this is bullish, right? It will consolidate, but still had problems to go up, but still around this year and this year, and then bearish one. So we do have all this. So we have the short, right? And then the heads. What the head? Another short, which could come all the way down here, but it won't always be like that.
Right.
So instead of me taking it, otherwise I had so many confirmation. Doesn't mean I'm supposed to take the sales all the way down there. It's majorly with your plan.
There you go.
So we see here that it came down here to this point, or even further down. But as we see, it didn't, right? So not we could have probably been stopped out, or we didn't secure profits, right? But we did. It's good, but mostly it's follow your plan.
I love that. What else we got?
Okay, after that pullback it did and started on the daily time frame, we see that it had a rejection. After touching that line or close to it, I start to see that we can see a prediction of bullish.
Okay.
Going back in again. And so we look for our time frame. So here we see the back in, but it didn't pay hold. And just for me to wait to see if it breaks, right? So take a buy, but not all the way up here. We see consolidation, order block, right? And we see here in 1 hour time frame, they came back and filled that gap. Right? It was a deeper gap, and filled it. So in 4 hour, it showed a gap, but we see in 1 hour it came out actually and filled it. So coming to the 15-minute time frame, here I didn't see nothing else but having my confirmation rate of that engulfing candle right there. And so as I saw it filled that, it didn't, there was no gap here, filled that one up, had a gap down here, saw possibility of it not coming back to it. And then up here, there was a gap filled, it was stalling into this area. And we see that otherwise it was keeping it there, it was still a bullish rate.
Right.
After it broke up here. But more than pullback and then it started to consolidate. And so right here I have my confirmation. Stop loss as always to the down farther part to the engulfing candle.
Right.
Part of it. And was waiting for price to head over it.
So did you enter at this evening star or?
No, so right here after it completed the engulfing candle, right here. Ended up here, which I entered at the time when they finished. Right? And I don't enter when it's on play.
Okay. Incredible. Only thing I will say on this is so as you can see here, like you did create the box around this consolidation. And we see that it's not really trending at all. And so pretty much at this point, there is really no structure per se. As long as it's still in this box, there is a potential for there still to be a reversal even within this box. So at the very least, we could take entries from, like you said, these engulfing setups. Now, if we would have took one from here, right? Price came back down, pulled into this zone, still is within the consolidation itself, but these engulfing setups definitely do give us the opportunity for us to understand that buyers are sitting in this zone until further notice. This particular trade, until we're able to get completely above here, then that is pretty much, until further confirmations, that's pretty much a sell, right? In that zone. Like if you're doing consolidation trades, right, scalping, then that would have been pretty much the opportunity for that. Now I do like what you were looking for because again, we're overall bullish. So then at that point, your entry would have been up here, right? That would have gave you the pullback that you need here. Then it's now taking off. But again, still like your overall objective of where you were looking for, because ultimately we were seeing the steps up more than this here. Price just continued to keep exhausting this zone specifically. Then eventually it had enough opportunities to make the zone a lot more weaker, because the more touches that you get in that same zone, the weaker it gets. And so when it came down to the buyers, there wasn't a lot of touches, multiple touches within that same zone for it to get weaker. So we were seeing the steps up. And then, I mean, even for what your strategy is of being able to do that triangle pattern, right? That's pretty much what we're looking at. And then it broke here, but now it's giving us a morning star and it came back into that same triangle. So yeah, man, like I said, solid all the way around, 2-to-1 ratio. Excellent. So yeah, and it's one of those things too, as well. It's like, we're not expecting for us to win all of the trades, right? We're just going based off the probability and based off what you just did, you won 2 out of 3 trades, right? And so if you're doing 2-to-1 ratios, that's phenomenal. All right. So now after of us identifying all of those trades, which were excellent trades, just overall, it was just, you sticking to your process and really understanding that the data that you get back is what is ultimately going to be able to continue to keep making you having a money printing machine. So now let's dive into specifically how you can allow the profits to get bigger without even increasing your overall win rate. Right. So specifically how we can go about achieving that. Let's just say, for example, right, are you normally just taking one trade basically per entry, or what currently right now?
Yes, watching.
Okay. So you're just taking one trade. Okay, cool. So we're going to go based off of that example. So you're taking one trade. Let's say that one trade is a 0.15 lot size. And so again, you're looking for those 2-to-1 ratios specifically, which now means that anytime that you are risking, so if you're risking those $50, right, that's what you're willing to lose. But if you win, you're making double that amount, which means now you're going to be making that extra $100 per trade that you win. Okay. Simple. Right. So now what happens is, let's just give ourselves an example. And let's say out of 10 trades that we just took, okay, we only won 4 of them. Right? So 4 out of 10, which actually gives us a 40% technically a win rate. Okay. So, but now let's figure out in dollar amount how much we're actually profitable currently right now, or are we in the negative? So currently right now, if you won 4 trades, you now have to multiply that number specifically by the amount of what you're willing to make. So you're clearly wanting to make $100 per trade if you win. So then now that's going to equate to $400. Okay. But the trades that you lost were 6. So now it's a 60% on this side. Okay. So now we have to multiply that 6 by 50 specifically to figure out how much we actually lost, right? Which is now going to equate to $300. So this is absolutely incredible, right? Okay. Like in most careers, there's no way for you to be successful in that arena if you're just only operating off of 40%. Right. And so here it is, you're still up $100 in profit based off of doing that specific, 2-to-1 ratio. Not bad. Not bad at all. Okay. But let's say that we were winning the same amount, but change something completely different. So instead of just taking one entry, and so the reason why I'm going to ask you this is because if we know we're taking just one entry, what is your percentage that you would say that before it goes into a your take profit? What would you say on average that percentage is when it comes down to drawdown?
60.
60%. Okay, for hitting your TP. So okay, so we got 60% for trades going to for hitting TP. Now, somebody could ask, well, why is this important? Well, see, over a collective of data that you're allowing the trade to play out, there's going to be information that's going to come back to you. And whether we're wanting to be, you know, whether we want to be aware of that, information or not, we understand that if we're looking closely, we can actually start to make some clear distinctions and specifically what it is that we can, effectively start to capitalize on. And so what we're going to do now, if we know that 60% of our trades, which is literally majority of our trades, is going into drawdown first before hitting TP, we can now, instead of us taking one entry specifically from that area, we can now specifically break up that same entry into 5 entries. Right? So instead of taking one, we're taking 5 trades. And if you do that, we're just simply now dividing that 0.15 with a 5, and then that's going to give us a 0.03 lot size to use every trade. Okay. So now with that being said, this now gives us an opportunity that the first entries, the first 2, will be from a 2-to-1 ratio. Okay. But the next 3 are going to be what's considered our anchor. So let's say, for example, we have ourselves a 35 pip stop loss. That's going to be a standard across the board. In order for this to be a 2-to-1 ratio, it has to be a 70 pip stop loss. Okay. So now with this being the case, if our trades are normally going into drawdown in some way, and it looks like something like this before hitting take profit. Okay. Then now what happens is we can now start to execute those trades at a halfway percent of that initial 35 pips. So entry 1 is going to be our initial 2 trades. So we're going to take 2 trades, which is going to be at 0.3. Now your last 3, which is your anchor, you take the last 3 trades. Okay. Might as well should do that. So this would be what? 0.0. Because we're multiplying this 0.3 times 3 because those are 3 trades. So this is now the new lot size. Okay. Which now means this one times 2 equals 12. So now that's a 0.0. So the difference in this is going to be significant because now we have to take in consideration that this one here is not going to be 35 pips no more. We're going to keep this the same stop loss as the original entry. So now that's only going to give us a 17.9 stop loss for the last 3 positions. Okay. But the difference between this is now the profit level is going to be significantly bigger now too. And we're going to keep that the same location as the first initial entry. So now we got to do a little bit of math. Okay. So we now know that the first entry, the first 2 entries, is now going to be 0.06 times 10 represents gold. So if you're trading some other commodity, you need to make sure you know specifically what that number is, so that all of this, can, make sense specifically, so you can know the dollar amount of how much you're risking, right? And then, so now we need to know the pip size. So these are going to be the first 2 entries. Okay. So that means that this is going to be 35 pip stop loss. That's what we want to figure out how much we're risking for that particular setup. Right. And so do the math on me for that. So we got a 0.06 times 10 times 35. What do we got?
21.
Okay. So that means if we lose, we are going to lose $21 with 2 trades there. All right. So now this 0.9, we'll times that by 10, we're going to times that by the 17.9. And what do we get there?
16.11.
16.11. Is that correct?
Yes.
Perfect. All right. So now we're going to have to add these 2 numbers together. So now we got 21 plus that 16.11. And how much are we now really risking?
37.11.
Okay. So in total, if price it's stop loss, you're only really risking 37.11. Okay, perfect. All right. Now, you know how much we're willing to lose at that point. Now let's see how much we're going to actually make. Okay. So now we're going to do the same lot size, 0.06 times 10. And then we're going to times that by 70 pips. What's 42? Right, perfect. All right. And what is our next one if we do a 0.9 times 10 times 87 point? How much does that give us?
78 and 66.
78.66?
Yes.
Excellent. All right. So what is this in total? So we got 78.66 plus at 42.
120.66.
120.66?
Yes.
Excellent. So now that means literally every trade that we win, if it's BP, that's how much we're making per trade, but this is how much we're actually risking per trade, right? 37.11 versus 120.66 in profit. So now, if we do the math on what that looks like over those course of those trades, right? So we already understand that we would be technically up $100 in profit based off of still having the same win rate of Lily 4 trades we won out of Lily 10. We do that same thing here of understanding that we now only have 4 trades that hit TP, and now it's $120.66. So now multiply that for me. We got 120.66. What is that amount specifically for what we will win? 120.66 times That 4.
482.
482.
0.62.
0.62.
60.
Okay, 64. Perfect. Sure. Okay, excellent. Now let's multiply that 37.1111 times 6, because it was 6 trades that we lost. So how much is that?
222.66.
222?
Yes.
Okay. And then you said 0.66?
Yes.
We lost. So, excellent. So now do that final calculation for me. What is 482.64 subtract that minus $222.66? We got
So we have 250.98.
259.8.
98.
And there we go. So here it is. This is now method 1 of what method 1 provides at a 40% win rate. Okay. And this is method 2. Notice how the win rate is the exact same as we said. I was going to show you guys how it's not only just about your win rate and what can absolutely increase your overall returns. It's really about understanding the data that you're getting back, knowing what you can do differently to actually increase the profits. Because at the end of the day, we want to make money. And so what we got to do is specifically figure out what are the losses teaching us that the wins can't. And so I like to look at it as an opportunity that when the losses comes back to us, they're not really losses. They're really just the opportunity for us to really just get better. Okay. And so literally this data wouldn't be here had we not went through the process of tracking every single trade that we're doing, specifically trading it the same way every single time, right? Because if it's not, everything is going to be random. Okay. And so this gives us the opportunity for us to just see we got the same win rate, which is a 40% win rate, right? And we're still, for the first method, up $100. But the second method, look how we literally doubled our income of what is coming in just simply by taking the same exact, setups, but doing it in a different method, which is now allowing us to learn that it's not only just about the win rate, but imagine what if you were able to do method 2 on top of being able to identify within the losses themselves, see what you can now manipulate a little bit, because a lot of times it is just 3 factors. If you are trying to increase your win rate, you simply now just have to identify your entry level, your stop loss, or your take profit zone, right? And it's always just those 3 metrics, which is ultimately what's going to determine whether you're going to win that trade or not. And so sometimes your entry could be too early, right? And if your entry is too early, it forces you to maybe have to increase your stop loss level to allow price to have a little bit more range to work with. But simultaneously, it could be another thing of your take profit being a little bit too high. As David mentioned before, there were certain things that he's seen in the market that he just understood. There could be an area that could stop my overall profits from continuing to grow. So I'm going to make sure that my take profit is going to be before it hits that zone and affect my overall, trades. Right. And so we got to understand that there are certain things that we can learn from the losses and not just letting it define us. So again, hopefully this bless you guys to being able to see that if you can make these little tweaks within your trading plan to understand that you do have a percentage of how many trades are specifically going in a drawdown before it hits your take profit. So what if you were able to implement that method 2 into your strategy to understand that you could literally just have your entry at least 50% of where your stop loss is. Imagine now how much money you're going to be now making just simply by just changing that alone. So hopefully this bless you guys of being able to see the insides of how you can specifically just become 1% better than the person you were yesterday. And this is going to trickle off into everything else that you do, because now you're showing yourself that you want to be diligent onto your assignment. So stay blessed.